Good morning, everybody. Hey, welcome to Friday. It is February 24th. Man, do you know this is the last Friday of February? And next week we head into March. Hard to believe, isn't it? Hey, we've got some stuff to talk about today. Earnings, we got some of those. We got some economic news coming out today. We'll talk about that and more when Dave joins us here. Up next, before we do that, though, let's not forget that in the world we live, there are so many things that you and we just cannot control. But you can control the amount of risk you have in your portfolio. You need to know what that risk is and how it lines up with the amount of risk you should have in your portfolio. Hey, give us a call for our core retirement design, 863-382-0037. Excited to be on with Dave here up next.
5.7 Light FM. Steve Perry is there. And Sherry. We're at 8:42 here. It's 18 here before 9. I'm checking on money and see what Wall Street's doing to us this morning. And yesterday's up. Today we get a whole bunch of government data, and I bet you can guess it's probably going to go down, or you will very nicely when you start hearing the data. Downtown Sebring we go to the home of Statler Financial Services, and Phillip Statler's on the line. Phillip, good morning. How you doing today?
Hey, man, happy Friday. This is the last Friday of February. It's just hard for me to believe this year's already just flying by so fast.
Way too fast. I told you I had some snark, and I can't help but get a giggle when 25-year-old kids start writing the lead stories on tip sheets. The lead on one of my tip sheets says, "Big tech is out, old economy is in on Wall Street." I think the proper term is we're going on a flight to quality right now. Wouldn't that make a lot more sense?
Definitely would. You know, it's quality companies should be, people should hang their hats on those guys and think that they should weather the storms.
Offhand, that makes sense. But, a 25-year-old kid who's writing the lead on a market tip sheet is saying, oh, my God, the world is changing. No, it's pretty much regressing to the mean. And you had an interesting thing, too, because about to get into a whole bunch of data dumped from the federal government. I understand our friends at J.P. Morgan are finally sick of all the statistical bull crud that the government's playing on us.
Yeah, they are. There's a site I use called Zero Hedge, which is a pretty conservative fund. Pretty conservative news outlet, but they came out with an article yesterday after the jobs report that says basically, with all of the quote unquote seasonally adjusted numbers coming out, it's making our numbers look better than what they really are. They made a note at non-farm payroll number that was seasonally adjusted to 517,000, which shocked the whole market system, right?
Sure did.
But they said the real number, the absolute number, was a decline of 2.5 million jobs. So that's a huge swing. That's a 3 million swing. And so they're really starting to call horse hockey on some of this stuff. Same thing with oil. They said, oil, the seasonally adjustments for oil inventory is just way off base. So with all the layoffs and all that kind of stuff, how can jobs be, first time claims be going down? And because they seasonally adjust all of those numbers. And so they're just really saying, hey, look, we're trying to, the numbers are trying to shed towards Biden, giving him good pats on the back for the economy, when if you look at the true real numbers, that is not the case.
And even if you take the political suspicions out of it, which I'm not necessarily willing to do, we were talking about this before we went on the air, and you and I have both been kind of alluding to this for the last 6-8 months or more. Seasonal adjustment makes some sense if you've got a normally functioning economy. If we're going through our normal patterns, there's going to be a lot of layoffs right after the Christmas season because a lot of seasonal employees get hired just for the month or so between Christmas and Thanksgiving. So they adjust that so that it doesn't look like major shock value and a whole bunch of people lose their jobs. But the difference today is that the normal patterns of doing things they aren't following. So you take a 30-year average, well, this always happens in February, so we're going to adjust for it. Well, yeah, it might, but it's not happening this February the way it did 20 years ago in February because the patterns have changed. So those seasonally adjusted numbers are just wacko from the hilt, aren't they?
They really are, especially in the trying times we are right now when we've not seen inflation or interest rate increases the way that we have seen them in the last, 12 months now. And so, that really, the seasonal adjustment can't really apply to this last, 12 to 18 months because we haven't seen this for 40 years. And so that's way outside the seasonal adjustment.
Absolutely. I've been whining for a long time. All the normal rules of thumb that you and I can normally lean back on that I learned in economics, they ain't necessarily working anymore. What's good news is bad news is good news, and the reaction you'd expect isn't necessarily there. So, the seasonal adjustment numbers they put on, like I said, it's been 40 years since we've seen this kind of a spike before, and it's too weird to be able to pattern 3, 4, 5 years ago and say, well, it's happening again, because it isn't necessarily. You were talking about interest rates being at a kind of an unprecedented set. This is not good news this morning that I'm getting out of the government from the 8:30 data release, because absolutely everything they dumped on us this morning gives the Federal Reserve reason to kick us up by another maybe even 0.75%. PCE inflation is the number that Jay Powell says that he watches most carefully. Well, the PCE inflation report for the last year, based on the January figures, they are expecting it to hold steady at 5% PCE inflation. Up to 5.4% PCE inflation went up by 0.6% last month, and they were only expecting 0.5%. That doesn't look good. Personal spending month over month, we spent 1.8% more in January, and we were expecting only 1.4%. For reference's sake, in December it was down 0.2%. And we spent 1.8% more, but our personal income only went by 0.6%, and they were expecting our income to go up by a full 1%. Offhand, if I were sitting at the Federal Reserve right now trying to read tea leaves, I'd say we're looking at a pretty hefty interest rate increase next month.
I gotta think so, man. This thing is just on fire, and they're not going to like that at all. They're going to be, hey, what do we, how much water can we pour on this? And they're going to get a bigger bucket, because this fire just seems to be out of control. They cannot get it under control, and so. I'm not sure what to expect now. I mean, I thought, well, 0.5% would be good. The market seemed to think 1/4, but I'm not off the limb yet to say we might not see another 0.75%.
Well, Bullard gets his way, it could happen. Even the core PCE number was about 0.5% ahead of where it was expected to be. And the core is basically the measurement of stuff where the prices go up, they don't go back down again. Once you get rid of the volatile stuff like food and energy, it was a full 0.4% more than they expected as well. So, I mean, inflation is not under control yet, and that might be the truism of the week.
No, it's not, and we are now solidly in an inversion between the 10 and the 30 year, with about 3/100% between the two of them, and the 10 years.
I hadn't got that yet, but you're right. Yeah, about 3/100% more. So now all of the bond rates are running higher than the 30-year bond rate, which is that I mentioned yesterday. It's a traditional harbinger of the onset of a recession. And now with everything being more than that, well. This no landing, no recession flower talk that we were hearing at the beginning of the week, I think somebody's retracting that about now, wouldn't you think?
I would think so, for sure. With all the numbers we're seeing, I just got to think that the Fed's going to pour some really big buckets of water on this economy.
Offhand, I suspect you're right. Yeah, things were looking kind of bleak this morning early on the futures before the government data came out. And it's looking even worse. It was an up day yesterday for the most part in all three of the major indexes. We got any reports that can float us up a little bit this morning out of the companies that are giving their quarterlies?
We do have a couple that came out. Beyond Meat was probably a big winner, though they still lost money, right? They came in and lost $1.05 a share, but that was better than the $1.18 that was expected. So that was good for them. Revenue was slightly above expectations as well. They're up almost 11% this morning, Dave.
Cool. I mean, folks, last quarter, folks were basically writing them off as being a dinosaur that was born too early.
Exactly. Hey, the other one we have that's doing pretty well this morning is Block. And that's the one that used to be called Square, that they're the payment company that processes payments through credit cards and stuff. And they had better than expected revenue for the fourth quarter, as well as strong growth in their gross profit. And they're trading up 5.3% this morning. So
I'm glad to hear that.
Now,
Absolutely.
I couldn't stop without at least a couple that aren't heading in the right direction. And one of them we kind of mentioned last week, Carvana. And they had a pretty bad fourth quarter. I'm gonna say a really bad fourth quarter. They were expected to lose money no matter what, but they were only expected to lose like $2.28 a share. Well, they lost $7.61 a share. Yeah, that's a pretty big drop for them. Yeah, and revenue.
They were supposed to be going into bankruptcy, I thought.
Well, based on these numbers, they may be getting closer.
Yeah, I know a lot of the tip sheets and prognosticators were saying that they were heading toward Chapter 11, and I hadn't heard anything beyond that. Evidently, the progress toward that direction hasn't changed much, has it?
I guess not. So they're trading down 13.2% this morning. And the last one, yeah, I know. The last one I have for you is I think a spinoff from Warner Brothers. It's called Warner Brothers Discovery. This is the Discovery Channel section. And they had a disappointing quarter as well. They lost 86 cents a share. They were expected to lose 21 cents a share. So they're not looking real good this morning either. They're down about 3% this morning.
And I'm assuming that means Don Lemon's contract at CNN is in pretty serious jeopardy, even if he wasn't a stupid fool. Quick, there's $500,000 we can get rid of it, all right? Resetting the table for the morning. It was an up day on Wall Street yesterday. We had a 34% gain on the Dow, up 109 points. S&P was up by 21, and NASDAQ was up by 83. I mentioned earlier that things took a turn for the worse, and they weren't real good when we started out this morning, but at 8:30, they just headed even farther south. How we doing 45 minutes before the opening?
We are getting cream this morning, Dave. When it comes across the cream, like,
cream
down,
okay.
Cream, yeah. So the Dow is down 1.1%, a little over $350. The S&P 500 is down 1.25. That's down almost $50. The NASDAQ 100 down almost 1.75%. That's $209. Let's throw in the Russell 2000 for good measure, down 1.6% or $30. And man, it is a bloodbath out there right now. On the other side, we've got silver. Silver's taking a bath this morning as well, down a little over 1%. It's just trying to keep its head above 21, and it's having a hard time. Gold's down 0.2%. Crude oil is up 0.2 to $75.51 a barrel.
Yeah, still under 76 anyway, and I'm glad to see that. Overseas markets, the Asian rim was mixed at the close this morning, either side of the zero mark. Europe is looking at our futures and saying, uh-oh, because they're all off fractionally halfway through their day. Well, just updated, German is down by over 1.1%, and France is down by more than 1% as well, so they just noticed our 8:30 report. Keeping tabs on retirement is something that you need to have a plan to do. Then you can sit back, relax, and talk like we do about how goofy the Federal Reserve people are. How do I find you to get that plan so I can laugh at Jay Powell with everybody else?
Dave, we got the Core Retirement Design, where we help folks design the retirement they always dreamed of. And give us a call at 863-382-0037 to schedule your Core Retirement Design analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday morning on Highlands News Talk 730 and 95.3 FM.
And we'll be back here on Monday morning to see what's going on and what happened to us over the weekend. Phillip, you have a blessed weekend, and I'll see you Monday.
All right, you too. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. Hope your week has gone well. Have a great weekend. Join us back here Monday morning, same time, same place. Until then, Have a great weekend.